Good evening, everyone. Tonight we're going to take a look at Burlington Stores Inc., ticker symbol BURL, and take a quick peek at their Q4 earnings for 2020. So as far as earnings per share go, it came in at $2.44 per share, which beats out analyst estimates of around $2.12 per share, with their total net income coming in at $155.9 million, which equates to $2.33 per share. So now that is down from the previous year of $206 million or $3.08 per share in 2019, but that is to be expected considering that there's still this retail delay due to the COVID-19 pandemic. Now, overall revenue managed to beat with $2.283 billion for Q4, which beats out 2019's revenue of $2.209 billion previously. And there's been a lot of interesting news coming around Burlington as well that we learned on this call. They're anticipating that with the closure of more and more brick and mortar stores, value-conscious shoppers will be driven towards more Burlington, as they seek out below market priced goods. Now, a more luxury-minded shopper is probably going to go to Amazon or other online retailers to seek out any products that they would like to purchase. However, for someone that is more inclined to buy something that's below the normal cost, management believes that they will actually be drawn to Burlington stores so they can scratch that itch of still going to a store and shopping and looking at goods and finding a good deal. Now, this also plays into why the chief executive, Michael O'Sullivan, stated that the company's planning to expand its store count potentially to around 2,000 stores from the current roughly 1,000 stores they operate right now, as they're trying out what they call the Burlington 2.0 store format. So that is a shrunken store, but with a more curated inventory. Think kind of what Aldi's does when it comes to grocery shopping. They're nowhere near as big as Kroger or Walmart, but they have handpicked good quality items to have there, which is why a lot of people like to go there. And also that decreased inventory allows them to offset costs a lot better, because instead of spending a lot of money to have a massive inventory, it's a lot more handpicked. Thus, that brings value to the shareholders because that's cash and capital they do not have to spend on goods. Now, to look at the month specifically, November was down due to warmer weather for that month. And now that does impact their sales because during November, a lot of cold weather gear is sold, in coats, gloves, boots, etc. So with shoppers not needing to purchase these coats due to the warmer weather, that did impact their sales, as they had projected them to be a bit higher for November. That's just consistently how the record goes with November for Burlington. December was flat on sales and matched comparables throughout the sector, but January had a double-digit uptick, which I believe was 11 to 12%, which was great because to them, this signals that this might be a sign of us turning the corner when it comes to retail, the environment that was created by, COVID. However, they did this, in my opinion, smart move of declining to offer guidance because there's still a lot of things up in the air when it comes to the retail environment, especially brick and mortar, as COVID is still going on. Vaccine hasn't quite been perfectly rolled out yet. People are now getting vaccinated. However, places are open up. It's not as easy to go out and shop as it used to be. Things are starting to normalize, but they just want to play it safe and not get up investors' hopes. However, there have also been the good signs that Burlington has actually gained 50% in share price over the last 12 months, which does lag the S&P 500 gains of 22%, but it is a healthy sign, in my personal opinion, when it comes to this company and the fact that it is a brick and mortar retail-based store, which that sector just got slammed through 2020. Now, just as a reminder, this video does not constitute financial advice and is just my own personal opinion. If you are thinking about investing in the market, please see a registered financial advisor for real advice. If you like this video, feel free to subscribe. I hope you have a great night.